In this video, I'm going to compare all of Vanguard's ETFs currently offered in Australia. ETFs are one of the most popular investment products in Australia, and Vanguard was one of the pioneers. They're Australia's largest issuer, with over 30 funds, and nearly 1/3 of all ETF investments made by Aussies is being placed with them. You can easily find and trade these ETFs on Moomoo, the most downloaded trading app in 2025 in Australia, according to Data AI. Just 13% of you watching are subscribed to my channel. Make sure to hit that button down below to see more Aussie financial content. Let's get into it. Vanguard currently offers 31 ETFs, up from 29 this time last year, which fall into 4 buckets. First is Australian equities. These funds invest solely in Australian companies. Second, we have international equities. These invest in companies all over the world, like Tesla and Apple. Third, we have fixed income. These ETFs invest in local and international bonds, savings accounts, treasuries, and corporate debt. And fourth, we have diversified ETFs that take a mix of the other 3 category funds to create a single fund, catering to different investor risk levels. So with that, let's jump into the Australian equity ETFs. Here we get 5 options. The most well-known of these is the Australian Shares Index, ticker VAS. This is Australia's biggest ETF with a massive $22 billion invested. It invests in Australia's 300 largest companies. After that, there's the Australian Shares High Yield Fund, ticker VHY. This is Vanguard's 4th largest fund and targets Australian top dividend-paying stocks. Then we have Australian Property, ticker VAP. As the name suggests, this ETF invests in a range of property assets. Along from there are 2 ETFs. Ticker VLC invests in Australia's largest companies, while VSO invests in many of Australia's smaller listed companies. And at the end, we have the Ethically Conscious Australian Share Fund, ticker VETH. This is similar to VAS, but it takes out any stocks involved in fossil fuels, alcohol, tobacco, gambling, that kind of thing. As we can see from the fund flows, at least in September, each of the funds had more money invested in it than taken out. After that, we have management fees. These are important to consider when investing, as high fees can clip your returns, dragging the fund's performance. VAS charges the lowest fees at just 7 basis points, followed by VETH at 16. VSO charges the highest among Australian equity ETFs at 30. As all the funds invest in stocks, they're considered high from a risk point of view. VAS has been around for the longest time, since 2009, and VETH is the newest, having just passed its 5th birthday. And finally, all the ETFs but VSO pay their dividends quarterly, with VSO paying out twice a year. It should come as no surprise to see VHY, Vanguard's high yield ETF, paying the highest dividend at an 8.3% yield. With an exceptional year in banking and mining, the dividend is unnaturally high this year, but shows the kind of yields possible with this fund. This was followed by VLC and VAP at 4.9 and 3.9% respectively. VAS currently has 311 stocks in the mix, while VLC has the least at just 16. After considering fees, Vanguard's small cap fund, VSO, performed the best with an 18% return over the past year. Property struggled, with VAP returning just 3.9% for the year. Over 5 years, Australia's high dividend yield stocks performed the best, while over 10 years, Australia's smaller companies topped the group once again. Personally, I always turn to Moomoo to check ETF dividend details. One of my favorite things about this trading app is that it serves as a one-stop information hub. They have absolutely everything you need to evaluate your options and find the right ETF for your needs. Take VAS for example. On its main page, you'll find key details like trading overview and money flows. Just tap fund and you'll get deeper insights, including the Morningstar rating, which is usually a paid feature on other platforms. Even better, at the end of the page, they have a clear dividend history, showing how the payout and yield has changed over time with a bar chart. Tap into it, and you'll see a detailed dividend history, as well as exact payment dates and amounts. This makes it incredibly easy to track and analyze. If you find yourself with several options but are unsure which ETF to buy, Moomoo offers a handy comparison tool that makes it easy to compare ETFs side by side. For example, if you want to evaluate VAS, VHY, and VAP, simply add these 3 ETFs and you can easily compare their volumes, performance, and dividends. It comes in a visual chart that is clear and convenient. And if you're thinking long term, you can even set up recurring investments in Moomoo. I do this for my dollar cost averaging investments. You basically set an amount and it gets automatically invested on your schedule. This is one of my favorite features because it removes the guesswork and hassle and helps you stick to a dollar cost averaging strategy. So if you're just getting started, ETFs are hands down the easiest and safest way to dip your toes in. Platforms like Moomoo make it straightforward and affordable to actually get started. If you're interested in signing up, they currently have a sign up bonus for new users. You can receive up to 30 free fractional shares when you first make a qualifying deposit. You'll also receive an additional 8 fractional shares if you share a post on social media. On top of that, you can also receive $0 brokerage for both Australian and US shares for 30 days. So that rounds out Australia equity ETFs from Vanguard. Next along, we have international equities with a whopping 12 options. Looking at the first 6, we start with VGS, Vanguard's flagship international shares ETF, and its second largest overall. This fund invests in over 1,000 shares from all over the world, but predominantly the US. After that is BGAD, which is a hedged version of VGS we just looked at. Hedging, in simple terms, means we remove the effect of exchange rates on the fund's returns. When we purchase foreign stocks, we have to convert our money into a foreign currency, like the US dollar. The Australian dollar can either go up, or appreciate, or go down, depreciate, meaning that the returns we make in US dollars will be higher or lower, depending on how the exchange rates change. Next along, we have VEU. This fund invests all over the world, like the two we've just looked at, but it excludes the US. So you won't find the likes of Apple and Amazon here, but you'll find Alibaba, Unilever, or even Tencent instead. Next along, we have VESG. This is an ethical version of VGS, which removes unethical sectors like gambling, weaponry, and the like. Then we have VVLU, the Global Value Equity Fund. This is an actively trading fund that seeks companies considered to be trading below their fair intrinsic value. And finally, we have VISM, which invests in small cap stocks from around the world. This just means that they're smaller companies. Now, when we look across all of the funds, they all have more inflows than outflows for the month. VEU also has the lowest fees at just 7 basis points, while VISM, the small cap ETF once again, charges the highest fees at 32 points. As these are all equity funds, we have a risk level of 7, and all except the Hedged International Shares Fund pay quarterly dividends. VVLU, the value index, has the highest dividend yield here of 6%, while at the other end of town, VESG pays the lowest at 1.5%. VEU has the most diverse mix of equities with nearly 4,000 stocks, a good mix across non-US regions, and across many sectors. Topping the returns table over 1, 5, and 10 years is the VGS fund. So the international fund with the largest investment also saw the highest returns. In our second set of international shares, we start with VTS. This fund invests only in American companies. Then there's the 3 region-specific funds. VEQ focuses on European stocks, VAE on Asian stocks excluding Japan, and VGE on emerging markets like China, India, and Brazil. Down from there, we have a global infrastructure fund, which invests in massive projects critical to a functioning society. And finally, we have the Global Minimum Volatility Active Fund, which invests in stocks with minimal price movement. VTS is Vanguard's 3rd largest fund, with a little over $6 billion invested. For their respective sizes, we can see large inflows into the Europe and emerging markets funds. VTS charges the lowest fees of the set at just 3 basis points, the lowest in the entire Vanguard suite of funds. The regional funds and even the global infrastructure ones charge very high fees from 35 to 48 basis points. There aren't any exceptional dividend payers in this set, with the highest coming from the infrastructure fund with a 3.1% yield. The VMIN fund on the end is higher, but a year prior they paid nothing at all, so it appears to be irregular. VGE, focusing on the emerging markets, has the largest number of holdings at a little over 6,000. The infrastructure fund has the smallest number at just 135. The US market fell short of Europe, Asia, and the emerging markets over the past year, but beat them over 5 and 10 years. One observation across Australian and global funds is the increasing weightings towards technology and financial sectors. We've of course seen the likes of Apple and Nvidia hit $4-5 trillion this year. But even here in Australia, the banks have been absolutely soaring. So that covers off everything stocks related. Now let's take a look at the fixed income options. First up is VAF, which invests in predominantly government debt assets with a long tail of corporate debt as well. We also have VGB, which concentrates only on government bonds, so they are high grade and backed by the state. Then we have VACF, which only invests in corporate debt, which is still investment grade, but of course doesn't have the safety that comes with investing in the government. Outside Australia, we have VBND, a hedged fund that invests in a broad range of debt assets. We also have VEFI, which applies the ESG principles across the debt assets of VBND to avoid funding companies that support sinful industries. There is also VIF, which invests in government debt from roughly 35 countries. And finally, VCF, which invests in government and corporate debt assets from around 50 countries. The largest fund in the fixed income space is VBND, with a little over $3.7 billion invested. The fastest growing, however, is the Australian Government Bond Fund, VGB, with inflows of almost 4% in September alone. The fees for these funds range from 10 to 30 basis points, roughly in line with the other funds that we've looked at. On the dividend yield side of things, all 7 funds returned between 2 and 3.8% as a yield in the past year. Australian corporate debt returned the highest dividend yield, while the International Fixed Interest Fund, VIF, returned the lowest. The latter 4 global funds are well diversified, with between 1,500 and 13,000 different debt assets held. They're also heavier on the AA, A, or BBB debt assets. Despite this, their returns over 1 and even 5 years haven't been as high as what we've seen in Australia, topping 5%. And below that, we can see a bit of a breakdown of the regions, sectors, and debt issuers that the funds are invested in. The last area for us to look at are the diversified ETFs. If you have a super account, you're probably already well across what these are. Vanguard has ETFs for conservative, balanced, growth, and high growth risk profiles. There is also 2 new funds this year, VDAL, which is a mixed bag of other funds focused on growth, and VDIF, which balances a focus on growth and income. The largest fund here is the high growth one, with over $3 billion invested. It has also seen the largest inflow in September too, along with the highest risk rating. The level of risk increases through the first 4 funds as their profile changes. Each of the funds carry the same annual management fee of 27 basis points, except for VDIF, and pay their dividends quarterly. Over the past year, the High Growth Fund generated the highest returns. Over 5 years, the title went to the Normal Growth Fund. And right at the bottom, we can see that each of the funds invest in a collection of other funds we've looked at in this video. This makes these funds unparalleled in terms of the level of diversification as they merge already diverse funds together. So if you're ready to invest in one of Vanguard's ETFs, you can find them all over at Moomoo. Make sure to check out my link down below in the video description and get up to 38 fractional shares with Moomoo for qualifying new users. If you're new to my channel, I post a lot of Australian investing content. Make sure to subscribe down below so you don't miss any of my future uploads. Thanks for watching and I look forward to catching you on the next one. Cheers.